Welcome back to the deep dive. Today, we're digging into a really core question for pretty much anyone managing their money. Investing or trading, it's a choice, right? That temptation of maybe quick profits versus the idea of steady growth over the long run. Our mission today is simple: unpack the real differences, look at the risks, the potential rewards, and ultimately help you get a clearer picture of what might actually work best for you. We're basing this on a really insightful strategic guide that cuts through a lot of the noise and gives some clear advice on what to prefer, and maybe more importantly, why. Okay, so let's start with the basics. When this guide talks about investing, what are we really talking about? What's the philosophy?
Right. Well, the guide frames investing less as just, buying something and more as a long-term mindset. It's really about building wealth patiently. So you acquire assets, stocks maybe, bonds, ETFs, and you hold them for years, decades even, letting compounding do its magic. The whole point is harnessing time in the market, not trying to perfectly time the market. And this approach, it tends to smooth out those day-to-day bumps and generally, carries quite a bit less risk.
That makes sense. Avoiding the daily market stress, focusing on the horizon. Okay, so if investing is the slow and steady approach, what about trading? How does our guide paint that picture? It sounds like the complete opposite.
It pretty much is. If investing is like growing a tree, trading is more like trying to catch lightning bugs, maybe.
Yeah.
It's all about frequent buying and selling. Sometimes really frequent, like within the same day. The goal is specifically to make quick profits from short-term price swings. But, and this is crucial, that speed comes at a cost, a potentially steep one. The guide really emphasizes the much higher risk involved. You've got market volatility, transaction costs, and it demands a lot more from you.
Yeah.
Deep market knowledge, serious discipline. It's a high-stakes game.
Yeah.
Very different vibe from investing.
Wow, yeah. The difference in time commitment and just risk tolerance seems huge. One is about patience, the other about pace. So thinking about our listeners, maybe someone starting out or just reassessing, what's the general steer from the guide for building that lasting wealth? What do they recommend?
The guide doesn't really mince words here. For the vast majority of people, it strongly advises preferring investing. It champions investing because it aligns better with stability, with long-term goals like retirement or saving for a house, things like that. Plus, it's generally less demanding, less time glued to screens, less emotional turmoil.
That sounds like solid advice for most people, prioritizing stability, peace of mind almost. But I can imagine someone listening thinking, okay, but what if I am really disciplined? What if I do understand the markets deeply? Does the guide offer any exceptions? Is there ever a time when trading is the suggested path?
Oh, okay, yes. But it comes with a very, very big if. A major caveat: the guide is clear. You should only really consider trading if you have this rare mix of, exceptional skill and rock solid discipline. You need to be able to handle the intense pressure, the higher risks, the potential for significant losses. It's not just about reading charts. It's about understanding market psychology, managing your own emotions under pressure. It's demanding. So it really poses a question back to you, the listener. Are you genuinely equipped and ready for that kind of commitment? And the potential downsides.
That really clarifies things, doesn't it? This deep dive, using our guide, shows this clear fork in the road. Path 1, investing. Long-term, stable, lower risk. Usually the recommendation for building wealth over time. Path 2, trading. Potential for quick gains, yes, but demanding incredible skill, discipline, and carrying much higher risk. So the guidance seems to be lean towards investing for your core goals, unless you are absolutely certain you fit that very specific, high-skill, high-discipline profile needed for trading. So where does that leave you? As you think about this, consider more than just the lure of quick money trading might seem to offer. Think about the value of stability, of growth over the long haul that investing provides. And maybe most importantly, be honest with yourself about the level of personal commitment, the knowledge, the emotional control each path truly requires from you. What's the factor that stands out most for your situation, your temperament? Something to really mull over.